Alright, so welcome to a new video. Today we're going to be talking about the unicorn model and how you can implement it into your trading strategy in a day-to-day basis. Before we start, if you have not watched my breaker video or my fair value gap video, I suggest you go watch them before watching this video, or else it's going to be harder for you to understand. Now that we got that out of the way, today we're going to be talking about breakers and fair value gaps and how combining the two, it will give us a nice little unicorn model. Okay, so now to reset, right here, we have a low right here, to a high, to a lower low. Okay, and we labeled them as our A points, our B points, C point, and then giving us D. Okay, most of the time, once we get a close above B, we'll get D, and you'll see most of the time we'll get a big displacement higher, giving us a fair value gap. And this would be the breaker right here. If you extend this right across, you'll most of the time you'll see price retrace to the fair value gap breaker. That is where you can place your long entry. Your stop could be at the low right here, or it could be below the fair value gap, or down here, up to you. And then you'll target whatever high is up there. Okay, so now let's use this in a real life example. Before we get started, I can give you about 10 seconds to spot the unicorn on your own and see if you maybe understand it a little bit. Okay. Alright, so if you did not spot the unicorn, it's right here. There's your fair value gap. This is your breaker right here. Okay. We have a low printed into a high, into a lower low, giving us a bullish breaker here. Again, if you did not watch the video, I suggest you guys to go watch the video so you can determine what's a bullish breaker, what's a bearish breaker. Okay, so in this occasion we have a bullish breaker, and if you extend, you grab the last up close candles of the high, boom, you grab the high, and you extend the top of the wick, the bottom of the wick, right across. You have your fair value gap most of the time there. Price will dig into that, and then that's a long entry right there. Okay, again, price is fractal, so if you see this on the 30-minute, you'll see it on the 1 minute, 2 minute, 3 minute, 4 or 5, 10, daily, anything, any time frame, since price is fractal. Okay, so again, let's show you a few more examples here. Let's see if there's a 5-minute right here. Again, this is a 5-minute breaker. We have a high to a low to a higher high. We go high, low, higher high. Let's mark out the points. Let me delete this. So again, A, whoops, A, B, C. Okay, this is A, this is B down here. Again, once we get a close below B, there it is, right? We can hop on a lower time frame. Look, there it is. We closed right here. So let me go and actually replay here, so you can see once we get a close right here, we can hop on a 2-minute, and there's your fair value gap here. Boom. You can potentially short right there because we get a close, and high, low, higher, high. You extend these right across, right? Boom. And this would be the next low, whatever. We already did that one, and then we'll grab your fair value gap, and there is your unicorn here. Okay, and there's your short. Stop goes to break even at this low, and you can target well, these relative equal lows down here, which I was targeting today. Boom, here it is. Let's see what happens. Stop goes to break even here, so you should not get stopped out at this point on moving forward. Looking at price, and there it is. Okay, news came out right there, and price went lower. Okay, there's your unicorn model. Again, this is on a 2-minute time frame. Perfect. Now again, let's see some more. Look at this. What was this? It was actually on Wednesday happened, and I bet there's probably another unicorn around here somewhere. There's a low to a high to a lower low. Once we get a close above, there's your fair value gap unicorn, internal break even, and price should not stop you out after the internal. So you entered here at the right here, boom, stop above the high, boom, there's your unicorn for longs. Okay, let's see, this is a unicorn right here, high, low, higher, high. Is there a fair value gap on a lower time frame? Let's go on replay real quick. Let's see, 5-minute, high, low, higher, high. Once we get a close right here, there's your fair value gap right here. We enter short right here. Stop goes to break even. Right after that, we should get impulse move lower. Okay, again, it all depends. Again, it all depends where the draw on liquidity is. You cannot just take any breaker, but this is an example of it. Okay, let's see what upper price does, and it delivers lower. But in this occasion, you'll get stopped at a break even right here. If you go break even here, and you're targeting, well, in this occasion, the draw is bullish, right? So if I'm gonna take a short here, I'll probably target the 50% mark. I'll probably target equilibrium of the range, which would be right around here. Potentially this fair value gap. At this, I would fully exit the trade because price could go and push higher. Yep, there it is. Okay, because the draw is higher. So in this occasion, you could take this little short setup here into equilibrium. You can hold it into equilibrium into this fair value gap, and then price could go higher because again, the draw on liquidity is higher. So you're not gonna take a bearish unicorn setup when the draw on liquidity is higher, because a bearish breaker in bullish market structure is a bullish turtle soup, right? So you'll just get swept, you'll get stopped out. See a few more examples here. There's a high, low, higher high. There's a breaker here. Boom. High to the low to the higher high. You extend this right across. This is, again, I'm just eyeballing this. This is not. Boom. Boom. There it is. Here's your fair value gap. Price goes lower. And again, this is on the hourly, so you would have entered right off this. Let's see, this is a nice little $6 drop. Nothing too crazy. But again, it also depends where the draw liquidity is. So potentially targeting this low and this low down here. I'll fully get out there, and that's it. What else? Let's see a few more examples here. Let's go to lower time frame. Okay. These breakers form all the time. This is a high to a low to a higher high. You extend this right across. This would be your breaker. Okay, let's go right here. Again, it looks like we're targeting the equilibrium of this range. We have low resistance above us. Again, I wouldn't want to short this, but if I was shorting this, again, if the draw is higher, I would target equilibrium. I would target these relative equal lows down here. And then this looks like another breaker. So potentially this breaker right here. I'll actually just target this right here. Boom. This would be my target. So let's go on a lower time frame. And let's check this out. High, low, higher, high. Let's see, is there an entry here? This is another breaker right here within the breaker, because price is fractal. High, low, higher, high. But if when you zoom in, this is another breaker right here. High, low, higher, high. This could be a breaker. Let's go. There's your short right here. Short position. You extend this right across again. You could have shorted here, or if you want, you can short down here. You can wait as well. Let's see. There it is. High, low, higher, high. Wait for the close below. This is the close, so I was short here, but let's say you want to be more picky, you want more displacement. This is your breaker right across here. Okay. There's your fair value gap. Boom. You can short right there. Again, short position right here. Stop could be at this high if you want, or this high up here. Targeting what I said, equilibrium of the range was there, and then the breaker right here. And then you could potentially take a long to target these relative equal highs, because this would be considered as a manipulation. Again, manipulation would be, again, I'll get into a whole other video, but once we touch into this higher time frame imbalance, into equilibrium, it could be the manipulation to come and take out these highs. So we'll collect some people, we'll get some people in shorts, and then we'll stop all of them out with these highs up here. Okay, so you can see right here, stop goes to break even at this internal. Let's see. Price goes lower into that breaker, and I can take fully out. Okay, now there's your breaker. Let's see if potentially I was right. There it is. Boom. We come up here. There's a part of the lower time frame breaker as well here. Let's see. We have a low, high, lower, low. This is our order block right here, right across. This could be a nice long right there. Boom. Then we go. Came down to equilibrium, and then price pushed higher into this. Okay. All right. So I hope you guys enjoyed this YouTube video. I hope I made it really clear for you guys and made it simple for you guys to understand. I did not create this model, but it's something I do use from other day traders as well. If you have any questions, leave it in the comment section below. And other than that, I'll see you in the next video.